Good afternoon. What's going on, everybody? Welcome to Train G's with G. Got some breaking news for y'all today. This is about Disneyland, the happiest place on earth, so they call it. So today, on May 7th, Disney announced their earnings. They hit on both the revenue and the earnings per share. A lot of analysts were doubting it because the whole tariffs going on and inflation. A lot of theme parks throughout the country haven't been getting as many customers entering their theme parks. But yeah, so this morning, at around 3:30 in the morning, Disney Company announced that they're opening a seventh theme park in the country of the United Arab. I don't know how to pronounce this. United Arab Emirates. I think I said that right. Close enough. In the Yas Island in Abdul Habi. If you Middle Eastern, don't be offended, man. I'm just American, African American, black man. But yeah, so the island covers about 10 square miles and is home to several theme parks, including Ferrari World and Warner Brothers World. So there's a little controversy going on by the LGBTQ community. They feel that it's like bittersweet for the people who live out there. I guess that country doesn't really support or really respect LGBT. So, there's mixed controversy, but hey, there's other locations around the world. So there's a way for everybody to be happy visiting a theme park as big as Disneyland. But yeah, the other six locations, the original one is in California, in Anaheim. As y'all seen my logo, my channel profile picture, you see me squatting down. I'm over there at Disneyland. I was actually at downtown Disney, Anaheim. So that's the Pro J one. It was made like in the 1950s, like mid 1950s by Walt Disney himself. And then you got Disney World in Florida. You got Hong Kong Disneyland in China, Shanghai Disneyland Resort in China, Disneyland in Paris, France, and then Tokyo Disney Resort, which is in Japan. And now we have the seventh one in United Arab. This is breaking news. I'm going to show y'all the chart work. I got a huge profit trading this. I've been swing trading since April and it's been paying off. So if you're swing trading, you may want to subscribe to my channel. If you're day trading, hey, I do that too. But so, this morning at around 3, this stock jumped all the way from around 93.50 all the way up to around right before the opening bell, or right into the opening bell to over 103. And this is the 1 hour time chart, by the way. So I stayed up early. I seen the news. I woke up about 5:30 out here in Cali. We're about 3 hours behind on time compared to East Coast. So I woke up early and took this position. Right at 6:30, I got out. I bought this last week Friday, so I liked how this was looking. This is the daily chart, y'all. And if y'all been watching my last couple of videos, I guess you guys have seen that my signature move is the falling wedge. And I've been waiting ever since it hit this recent high in February 5th of 118.63. And it finally peaked out right over here on the 23rd of April. I didn't like this red candlestick. I like this green bullish one. I gave it some time. It's been consolidating. And on Friday, May 2nd, it went up. And Monday, it tanked down quite a bit, but it came back up. It went all the way down to 89 and back to 92. I bought one call option, $105 call option. It was only $90. It expires next month in June. So it's yellow lines, my strike price at 105. I got in at around this price, 92.83. So I held it over the weekend up until Monday and Tuesday. And Wednesday, today it just spiked up. This is a green candlestick and it hit 103.31, came back down, closed at 102.09. So overall, that was a 10.75% change on the day. In the positives, we're up $9.92. And that's what I do, y'all. I take small risk and big reward. I don't recommend anybody doing any trade options, especially when a stock is close or at the earnings. So, with this being said, I'm gonna make my disclaimer. Listen to the Dreadhead Trader with the grain of black salt. Do your own due diligence. Be your own DD. Be your own designated driver. Anything that I say, you can't trust 100%. Know that I have your best interest, and I always keep it 100. So, like I said, I dropped 90 on this call last Friday, and today I walked out with 300. So that was a $210 profit. I'm currently down about 330 on the year on my account. I was just down about 550, 540. So that was a huge gain for me. I'm not trading for the rest of the week, man. I was gonna kick up my feet and relax. So if any of y'all are interested in investing in Disney long term, it is a part of the Dow Jones 30 Index, Day Index, ticker symbol DIA, and you have to follow this index if you're trading it, or better yet, investing in it, as well as the DGI. But we're gonna use the ETF for this one. So with the whole Trump's tariffs crap starting last month on April 3rd, as we all know, everything started tanking real bad. And now it's sort of peaking back up. And today, the Fed chairman, Powell, said that nothing's really going to happen with the rates. It's going to, really see and wait and see what happens. So everything is pretty much stable stuff. Hopefully should be going up, at least as of now. But of course, with these tariffs, with the president, anything can happen. But yeah, if you're interested in investing in Disney, I'm gonna show y'all a little quick backdrop of their company, and then I'm gonna get up out of here. So they're number 76 in the world as far as market cap. They're right over there at 184.5 billion. This company has been around for quite a bit. They went public, I believe, in the 1960s or 70s. I'll show that after I'm done breaking this down. So they reached their all-time high as far as market cap in 2021, because we know COVID destroyed everything and everybody was in the house. So everybody's so happy to go back outside. So ever since then, it's been tanking. I believe due to inflation and, the theme park is overpriced, as we all know. You gotta drop by $100, $125 a baby. Don't matter what age you are out here, whether you're a baby or a grandparent, you gotta drop over $100. Not to mention parking, merchandise. So they've been struggling, but they obviously have plenty of money. So this obviously is a legendary company. ESPN owns them. Or is owned by them, excuse me. Their dividend, they don't really pay out much. I'm not going to lie to you. They started paying dividends in 2004. And when COVID happened, they stopped paying. So they're only paid once every 2 years in '04. Then from '06 all the way up to 2014, they paid only once a year. As you can see over here, it's not much, just a couple cents here and there. And you keep going up. In 2016, they paid twice a year, and ever since then, they've been paying twice a year. And their dividends was canceled, like I said, in 2020, and it came back in 2023 at 30 cents. They only paid once to end the year, and then twice last year, and currently once this year. So if you're into investing long term for Disney, this is kind of like a dividends chart. You want a chart that's going to go up and up and up gradually. And as you can see, it's very inconsistent and shaky. It crashes, it goes back up. That's because of all the revenue that they've been losing really since COVID, and now they're getting back on their feet. So that's why I suggest anybody wants to do that to get into the ETF because you're only gonna get paid once or twice a year at this company, and it's not much, and you're spending about $100 a share. It's a slow process, but you want a company that pays every 3 months because this 50 cents right here is equivalent to getting $25 a quarter, which is every 3 months. That's $1 a year. So unless you're really patient and play the slow game, you only want to get cashed out twice a year. When you're older, of a nice salary, then so be it. But even if you see they don't consistently increase the dividend, they take it, they raise it, they lower it, and then they get rid of it. So that's why I suggested ETF such as Day, because it's in the cluster of 29 other companies in the Dow. I'm gonna go to the monthly chart to show y'all the history of this stock. It's been out since 1968, y'all. All-time low is 21 cents. So I want to show y'all I think they've done a stock split. Yeah, they've done quite a few actually. So in 1971 they did 2-for-1, 1973 a 2-for-1, 1986 2-for-1, 1992 a 4-for-1, 98 a 3-for-1. In 2007 they did, I don't know if this is a real like legitimate number, but yeah, they did a 10,000 to 9 or whatever that is stock split. So if you think about it, this stock is really worth much more than the current share price. But like I always tell y'all, you guys want to buy any type of growth or dividend stocks, you got to know the history of these charts. You got to know how to read the candlesticks if you want to trade. With all that being said, this is your boy, Train G's with G. Until next time, I'm out.